What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and today we're going to be going over the markets as usual. We're going to be taking a look at the DXY, Dow Jones, and then we're going to take a look at Bitcoin and what I think is going on. We're going to take a look at our validation and invalidation points. If you like the sounds of that, make sure you smash the thumbs up. Leave your comments down below. Let me know what you think of the video. Also, subscribe to the channel and tick that notification bell to get you notified when I post new videos. At the end of the video, we'll be looking at Google. That was your guys' pick for yesterday. A lot of people have been asking for it, so I thought I'd throw it out there. You can leave in the comment section below what ticker you would like to see at the end of tomorrow's video. We do that every day, and then we pull up a different chart at the end of the video every day. So definitely don't forget to make your comment down below, and let's get into it. So as of the time of making this video, the Dow futures are down 28 points. S&P is down 6. NASDAQ's down 25. Now, about an hour or two ago, it was down a whole lot more. So does that mean we could get a nice little bounce today? That's a possibility. Where would Bitcoin go if we get that? We're going to talk about that. We're also going to be taking a look at a chart I drew about a year ago and see where that's at. It is the macro Elliott wave count. Now, a lot of people think that the Amazon compared to Bitcoin bubble chart is a Elliott wave count. It is not. That is a bubble pop pattern with 5 waves. That's not 5 waves of Elliott wave. But we're going to take a look at some Elliott wave theories as to how this may play out. I talked about it a long time ago. I still talk about it now. I'm going to talk about it again. And it is, since Bitcoin's creation, the traditional markets have been on a bull run the whole time. Bitcoin has never seen a traditional bear market. And I've always said, if the traditional markets go in a bear market, Bitcoin will not be able to hold up. I know a lot of people say that's what Bitcoin was made for. It'll, hold up. It'll, separate from the markets, do its own thing. The fact is, Bitcoin is just a speculative asset at this point. That may change in the future, but as of right now, it is a speculative asset. So we're going to talk about that a little. Make sure you stick around for the whole video. There's going to be a lot of info packed in. I'll try to make it as quick as possible. So this is the falling channel that we've been watching in the Dow Jones. Now, inside the falling channel, we had this rising channel, which we fell out of. The measured move of that is all the way down to 2761 area. Now, that doesn't mean we have to go straight down there. Obviously, as you guys know, we could definitely get a massive bounce if we hit the bottom of this falling channel, which if we did that today would be somewhere around the 28.2 to 28.3 range, and then get another bounce up before continuing down. But the invalidation point of this is bouncing back inside this rising channel here, and that would have to be, if it was today, which I highly doubt it will do it today, but if it was today, it'd be a break of the 31,250 points. We also have a rejection area right here at the center of the falling channel at about 29.2. If we do get a rally up today, it may be to close this gap right here. You can see it. And that gap goes all the way up to 29,850. So still staying below the 30,000 range. But again, guys, if we break this 28.2, our next stop is going to be this 27,000 range. Maybe come back up in a week or two, come retest this, get a little rally and everything, and then continue down. Because the break of this falling channel here has a measured move of around 23,000. Then, of course, we have our long-term trend line down here, at 21.5, whatever in that range. And if this breaks, it's going to be really, 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 really bad. Another thing we can look at is, we look at this in the RSI, same thing, guys. We showed this whole time, right? We had a higher high in the RSI, a lower high in the price action. That was bearish divergence. We expected this downturn, and of course, now we're getting it. DXY. The DXY seems to be pulling back. Now, a lot of people will be looking at it in the 5-minute time frame, telling you that the DXY is crashing. We've talked about for quite a while that we could come back down and retest this trend line one more time. That is a possibility. So if that was to happen, we would probably get one more rally with Bitcoin if it does. There's nothing to say that we're going to break down past this ADMA, which is around 112.50. But if we do, within the next few days, we could possibly come back down to test this. Now, I'm still very bullish on the DXY, and I'll show you why. But in the small time frames, we could get a pullback. If we put the Fibonacci extension on here, we go from this top to this bottom here. And we go back up to this top. That's looking at this as a possible ABC. Now, if we were to come back down here, this would be the 0.618, about 110.26, 110.62 would be coming back down to test this. And that would probably maybe be today if we do have a big fall here. That would be retesting the 0.618, and then I think we would have a huge rally like we do every time we test this line. But there's nothing to say we have to test that. We're still above the EMAs here. This could turn around and just continue to the upside. Now let's take a look at the weekly, and I'll show you what I've been watching. I still expect us to reach at least 122. Probably get a big rejection there. But at whatever point when we get above this and get support on this 122 range, we look at the big picture here as a big falling wedge, and the measured move of that would get us all the way up to around 178 to 180, somewhere in that range. Now you can see how when the DXY rallies, it rallies hard, right? That is possibly what we could be looking at. You see there's pullbacks in here where I'm sure people got really bearish on it and whatnot. But nevertheless, this is my target once we break the 122. But the 122 area is what I've been waiting for a long time. I still believe we're going to see that. Before we get into Bitcoin, guys, definitely check out Prime XBT. Links down below. You can use my promo code SAVVY50. That'll get you up to a $7,000 bonus to use towards your margin. Now, that'll last for 30 days. And after 30 days, you can just reset a new account with another email, put your codes back in, and use it all over again. But you have to switch emails. Savvy25 will get you 25% off of your trading fees. Definitely check them out if you haven't already. You can trade Bitcoin, crypto, Forex, gold, silver, oil, S&P, Dow Jones, everything all from one exchange instead of jumping around from different exchanges. And you can have multiple trades in at the same time. They don't clump them all together. So looking at this on the daily, this is Bitcoin here. We've been watching this falling wedge, and I have this 5-wave count within this falling wedge, right? So there's a couple ways to look at this. This could be a big B or an ABC correction and a major continuation to the upside. But I think we have further down to go before we can even start talking about the upside. And I'll explain why. If we look over here, well, you can see in the RSI also, looking at the daily on the RSI, if we zoom in here, you can see, and I'm going to explain something that I've explained a lot. If you watch this channel, you'll know what I'm talking about. But we have this trend line on the daily RSI here. It did close below. If we zoom in here, closed below yesterday. Remember, RSI follows the body of the candle, not the wick. So right now it is back inside, but the day isn't closed. So if this closes up here, this may be bullish. But my bet is it most likely is going to close back down here and then have a continuation to the downside, maybe get another lip up, sometime this week before continuing down. But as of right now, we did have our close below yesterday, right? So remember, the RSI follows the body, not the wick. So you can't use the RSI for divergence until whatever time frame you're in is closed. All right, let me get that RSI off there. We're going to zoom in. We're going to talk about this chart a little bit. So let me get this out of the way. Remember, this was our correction here, the ABC, which we were waiting for. I told you to look for that in the mid-June. If we go from that bottom to this top, back down to this bottom, looking at that as an ABC, where we almost tagged the 1.272. We got past the 1-to-1 extension, which made a fake out, big bull trap. Didn't quite hit the 1.272 fib. And if we go over and look at where we're at now, let me get this out of the way, right? We'll go into the small time frames after this. But let's look at this as the same thing, right? An ABC. Could it be an ABC? And this, guys, is Elliott wave, not the bubble pop pattern, looking at it as the Elliott wave structure. So if we look at this as an ABC, right? The 1-to-1 extension is at 12.3. That would be one place you could look for a massive bounce if we drop below this area, which I do believe we will. Looking at this as an ABC would look something like this. So this would be a big A up here, B, and then C, getting us all the way down to that 12. That would be the 1-to-1 extension, but a lot of times it goes past that. What's our next trend line? Is the 1.272, and that is lying right around 2,500. I do think we could see the 35 to 4,500. That's what I'm looking for, but that may not be, we may not get there until sometime next year, and I'll explain that why in Amazon to Bitcoin bubble pop pattern. But if we were to drop straight down there this year before the end of the year at some point, I believe then we may have bottomed, and then people can go on talking about their 4-year cycle theory. But again, I'm going to show you a bigger chart that invalidates the 4-year cycle, in my opinion. But if we do get the bounce at the end of this year, then maybe the 4-year cycle will continue. But I honestly don't think it will. All right. Or it may continue, but it's not going to be 4-year bull run, 4-year bull run, 4-year bull run. It could be 4-year bull run, 4-year bull run, 4-year bear, 4-year bull run, 4-year bear, blah, blah, blah. If you guys notice that the 4-year cycle aligns with the 4-year presidential election time. So there's a lot of people don't want to look at it that way, but that's pretty much a fact, guys. And remember, if the traditionals are in a bear market, Bitcoin could be in massive trouble. All right, so anyways, let's get that off there. Let's take a look at what we're looking at. So for the bulls out there, let me get this out of our way. For the bulls out there, we've talked about this here, the measured move of this falling wedge. We did break up out of it, but we talked about that being a possible fake out, which it does seem to be. It's just riding this line back down. Once we get back below it, that will probably become resistance and will continue to the downside. But within that wedge, we have this falling triangle or descending triangle. That is our major area we're watching, right? And as of right now, if we look at where this is at, the top of this triangle is around 20,200. So a break of that, that's also the 55 EMA. So if we do get a rally, it'll go up to probably about that 20,200. Now, if we break that, then we can start looking for more upside, like 200 EMA at 26,000, somewhere in there. But we like to keep an eye on how the macro of the market is, as you guys know, and the macro is still massively bearish. So let's take a look at what happens if we use the measured move from over here, which this I think is highly unlikely, but it is a possibility in the chart as long as we stay above this white top of this trend line. That would get us all the way up to around the 48,500 range as a measured move. But again, we have to watch what's going on in the smaller time frames first. And looking at this descending triangle, if we bring the measured move down here, if we do break this 18.2 area, that gets us down to that 34,000. Now, like I said, if that happens fast by the end of this year, sometime in November, end of this month even, if it is a huge capitulation, which I don't think is likely, but if so, we could bottom this year. 4-year cycle continues. But I do believe we're going to get a false bottom. And I believe that to be somewhere in the 75 to 8,500. And I'll show you why here in a minute. But before I go any further, guys, I know a lot of people forget. So just take a second out, smash that thumbs up. Let's get this video to at least 1,000 likes. Let's shoot for 2,000. Get it out there. Share the video. Anyways. So like I said, we could take a look at this. This is at around 20,200 is a 55 EMA on the daily, also being the top of this triangle. We break that, then we can start looking for the bullish case scenario. But otherwise, I'm looking for at least a retest down to the 18.2 area and coming down. Does that mean it has to happen today? Absolutely not. We could just see sideways. But these are the major points to watch. put in a long. If you get up past that 20,200, put in a short. If you get past the 18.2, that simple. On the daily, it's got to open and close a candle above or below them areas, right? Let's take a look at the 4 hour now. And then we'll go out and zoom in or zoom out, look at the big picture. So this is the 4 hour, right? We've been watching this rising channel, which we broke out of, and it seems to be, we tested the bottom of it now. We had this here yesterday to watch for a break of that, right? So right now, let's just put this in there so you guys know where it's at. On the 4 hour, we are getting rejected at the bottom. We got a wick above. Let's look at the RSI. The RSI is resetting pretty quick. If we do get a big blast up to here, then maybe... see, I have it in the 4 hour, but way over here. If we put it in the 2 hour at the top of that, like I said, watch for around 20,200, depending. If it takes, you know, tomorrow to get up to this range, it'll be lower. But nevertheless, anything below this, bearish. Anything above this, if you're playing in this range, bullish. But it does look like we're getting rejected there. We had our measured move of falling out of that rising channel down to about 17.3, 17.4 area. So if we break this 18.2, look for a bounce around 17.3 to 17.4 area, which will line up with our old low, maybe wick below it just a little bit. Maybe we get a bounce there, fake people out. But I think if we do get a bounce here, we come back up, we maybe retest this 18.2 area again before continuing down to our 14 to 15 level. Excuse me, guys. All right, let's take a look at the macro. So in the macro, I will be looking at this too. You can see this RSI trend line on the weekly. I do think this will most likely break. Probably, I'm looking at February or March of next year for it to break, get a big rally, maybe 100, maybe 150% rally, and then a continuation down to retest the top of this. And I'll explain in the next chart before we get into Google. All right. So as you guys know, if you watch the channel, we had this measured move up here, which was just the measured move. Once we broke this rising channel, these play out. They just take time, but people get impatient. We nailed our target here, and then we came down, made another bear flag, nailed our target there. Now we've made another bear flag, but we'll take this measured move of this rising broadening wedge, and this is how I get the 14.5. I really believe we go down and see that 14.5 unless we get back above here. Now this will invalidate it if we close a weekly candle above 23,486. I know a lot of this sounds weird, but these are invalidation points. So the reason I stay bearish is because my invalidation points have not broken. As long as they don't break, I have no reason to become bullish. I mean, look at the trend, guys. That's a pretty steep trend. I don't think it's just going to turn around in a day and moon like a lot of these people are looking for. So the other thing we could look at is take that same bear flagpole pattern, bring it down to here. That gets us to about the 8,500. So that's why I say 75 to 8,500 for the false bottom, which we'll talk about in a minute. We also have a much lower target, and that is taking this trend line break right across here, bringing it from there all the way to the bottom, looking at that as a big bear flag, and that's what gets us at 38 to 3,500. Now, looking at the .com compared to the Bitcom bubble. Yes, I said Bitcom bubble. These tops were in the same time frames. These are both weekly charts, both on the same scale, and it seems to be playing out. Now, this is the 5 wave. This will be, and that's not an Elliott wave count. This is a bubble pop pattern, totally different. This 4th wave, I don't think will come until 75 or 8,500. Then we'll get a false bottom, get this rally up here. And if this plays out the same way, this should be sometime in February or March of next year. Get a big rally there, put it along, buy in case it never goes lower. But you could buy there. Now, if you guys think we bottomed, buy now. It's totally up to you. I'm telling you how I'm reading the charts and showing you what I'm seeing. None of this is financial advice. So far, everything's been correct. But do your own due diligence, do your own research, learn how to follow the market patterns and the structures. You can watch any of my videos in the past and you'll see not everything's perfect, obviously, but we've called this whole structure to the T. We called this top about 2 weeks before it happened. Then I told you to look for middle or end of June to get a big rally that would be a massive bull trap. I didn't think it'd go as high as it did, but I said to look for an ABC structure, which we did. And then on December 2nd, I came out with this chart when I noticed this bubble pop pattern. If you open my YouTube page, it's playing right when you go on there. There's also some tutorials on there if you want to check them out. But again, back to this. I think February or March, we get a rally up into, you know, maybe even as high as 15,000, 12 to 15,000. Depending on where this is, it'll be 100 to 150% rally, get everyone extremely bullish again. Now, if you believe that it's going to be a false bottom like it was over here, because another thing we can watch for is a break of the RSI trend line, just like we had here. Everyone got super bullish. It broke a year-long weekly trend line on the RSI. Had to be bullish. Well, it was, but it came back down just for a retest and made the real bottom afterwards. Now, if that was to happen, that would be around September, let's say middle or end of next year. And then, you know, we could, and I don't think it's going to go straight to new all-time highs after that, and I'll show you that in the next chart. I'm just kind of trying to give you guys an idea of what's going on. Oh, one more thing before we go into Google. I want to let you guys know we will be doing a Twitter Spaces. Make sure you give me a follow on Twitter. It's at CryptoSavvy1 right here. Profile. At CryptoSavvy1. That's it. No underscores, no nothing. Give me a follow on there. We're going to be doing a Twitter Spaces, and it's for everybody. Some of the guys in there, they're with me. We're all together on it. I'll throw out a tweet later. I got a lot of stuff to do today. I'll try to remember to throw out a tweet. But yeah, there's going to be 4 of us. Some of them they're not, we don't think the exact same about stuff. So there's going to be tons of different views. You're going to get, you know, NFT views, things like that. And I am open to talking to all that stuff. A lot of people think I'm not. I'm just not open to talking with people that are rude and just don't want to look at both sides. I'll look at someone's side without any problems. You know, I like to see other views, but they have to be given in a good way. People have to respect each other, and that's what this Spaces is going to be about. So make sure you join us. It's on Friday at 3 o'clock, and I think we're going to do it every week, and that's 3 o'clock Eastern. So make sure, like I said, I'll try to remember to send out a tweet. If not, I'm sure them guys will start sending out more tweets. But it'll be very interesting. We got a lot to talk about. It's not just crypto. We talk a lot about life, what's going on in the world, things like that. So definitely check it out. All right, let's get into, so if this does play out, same time frame type pattern, yes, middle or end of next year, we'll get a big rally. This was huge, but did it go to new all-time highs? No, it made another reversal. So we'll have a lot of time to make a lot of money in here. See all this up and down. It's not just buy and hold till the end. I mean, if you want to do that, go ahead. But it could be 10 years till we break the new all-time high. I've showed other bubble pop patterns that have been 15 and 20 years now that have not even reached their new all-time highs yet. They've gotten close, but they haven't reached them yet. So I think this is going to blow out that 4-year cycle crap. But as you can see here, this could be, you know, the 4-year cycle. Everyone gets super bullish, thinking we're going to new all-time highs, got a hell of a rally here, and then boom, just to come back down in the next 4 years, right? That's what I said. It could be 4-year cycles, but it doesn't mean it goes up every 4 years, right? So anyways, that's what I'm looking at. Now, here is the big Elliott wave count. Looking at this as a big 1, 2, 3, 4, 5. I know tons of people are like, 3 isn't big enough, blah, blah, blah. Well, if you do a little bit of research in Elliott wave and how it works, 3 is often the longest, not always, and never the shortest. It is not the shortest here. And this is a log chart, and it's on a log chart so I can fit it in there and you can see it. We're going to look at it on the linear chart and it'll make a lot more sense to you. But there's 5 waves within this wave 1. Then we had a correction. Then we had 5 waves here in 3, then a correction, and 5 waves in 5. And as you can see, this indicator I have on here, this is the RSI, RSI SD, which is supply and demand. And at the top of wave 1, you can see all the supply and demand up here. Top of wave 3, supply and demand. Top of wave 5, supply and demand. I think this is one big bull market, and this is our first bear market. Now, where this correction goes, like I said, I'm looking for 35 to 4,500. Could go much lower, depending on how long the bear market takes. But this is what I'm watching, guys. So far, so good. Seems to be playing out to the T. As you can see, we are below this high that we were never supposed to break, 20,000, right? And shoot, wave 2 could come all the way down here, depending on how long it takes. But we'll be keeping an eye on it. Like I said, I think we're just going to see our big correction here, and then we can continue on. And it doesn't mean that we're going to make new all-time highs in 5 years. We could, but I just don't see it, guys. This looks like a huge bubble pop pattern. Let's put this in a linear chart real quick, and it'll make more sense to you. As you can see, 3 is not the shortest. 3 is often the longest, but never the shortest. This was a huge, you know, people talk about there was no blow off top. I mean, put this in the linear, guys. This was a huge blow off top. Huge. So anyways, that's what I'm looking at, guys. Let's look at Google. Google, real simple. This is on the daily. How do you get bullish on Google? It would have to break back up above this 107 or 108 area. Or actually put it at 108. So to get bullish, it would have to break above 108. My targets right now are, you can see this triangle here. Once it broke down, we take a measured move of that. It gave us our target right here. Bam. We weren't watching it then, but just to show you guys how this works. So what's our next target for Google? Well, we take a measured move of this rising channel, take it down to where it broke, and gets us to about that 88, 89. Yeah, let's say 89.50. That's my next target. If you look at the VPVR, there's huge volume node right here. We're getting rejected at this volume node. Then our next target, if that 89 breaks, right, we'll probably get a bounce there for sure. Not for sure. Probably. Got to watch what I say, man. People go nuts and say, you said blah, blah, blah. These are all probabilities, guys. They give you, I try to give you invalidation points. People say you got to look at it both ways. I do, but I have invalidation points. If my invalidation point isn't crossed, no reason to switch which way I'm looking at it. So another measured move is measured move from the break of this trend line down 78.21. And the big one, we go from here. This top, looking at that whole thing as a flag pull, this being a bear flag, that could get us down to about 65.50. I know people think that's crazy, but guys, looks pretty much like everything is in a bubble pop pattern. Thanks again for watching. Don't forget, smash those thumbs up, leave your comments down below, subscribe if you haven't already, tick those notification bells, make sure you get notified when I post new videos. I do videos Monday through Friday. Like I said, I got a lot of stuff going on today. Tomorrow also, maybe Thursday, I'll do the members video. You can join by hitting the members link down below. Definitely check it out. It should be a good video. We'll go into detail. There won't be any trolls there. We'll be doing it live. So thanks again for watching, guys. I'm out.